Good afternoon, and thanks for joining us for today's webinar, Mergers and Acquisitions for Nonprofit Organizations. I'm Janice Snyder, partner at McKonly Asbury. And joining me for this presentation today is my fellow partner, Gary Dubas. Gary, would you like to say hello?
I would like to say hello, Janice. Hello.
That's great. Thanks, Gary. Gary and I both work with a lot of nonprofit organizations here at McKonly Asbury. Here is our slide and our information. And if you're not familiar with us, McKonly Asbury is an accounting and business advisory firm with offices in Camp Hill, Lancaster, Bloomsburg, and Philadelphia. We offer a wide range of services, as you see here on the slide, with some of our services provided to a variety of industries, including nonprofits listed down there, as most of you are likely here with us from nonprofits today. For more information, you're welcome to visit our website. If you've joined us on past webinars, welcome back. We're glad you're here. If you haven't, we have monthly newsletters that feature various business topics to keep you updated on what's going on around us. Gary, you want to share a few words about our M&A insights?
Sure. So 15 separate newsletters you can sign up for. You'll get periodical every once in a while. You will see the newsletters come out. 10 industries, 5 other areas of focus, and with the code there, if you scan it, you also could order a menu item from your favorite restaurant as well. So it's really cool. Yeah, so.
Not so sure about that one, but all right. Thanks, Gary. So you probably noticed we have here with us today a guest speaker, Frannie Reilly. I've had the opportunity to work with Frannie, but I also tremendously value her expertise in this area. So Frannie, would you like to introduce yourself?
Great. Thanks, Janice, and thanks, Gary. I am thrilled to be here. My name is Frannie Reilly. I am a member with McNees Wallace Nurick, a law firm based here in Pennsylvania. And I am chair of our firm's charitable nonprofit practice group. I have served nonprofits now for over 20 years. I feel like every time I say that, I wonder who that child prodigy must have been, but you know, here we are. In addition to practicing law and working with nonprofits, I'm also very actively involved in our nonprofit community. So I put my money where my mouth is, and I started and run an education foundation for our local public school district, the Education Foundation for the Wallingford-Swarthmore School District. In addition, I teach at LaSalle. LaSalle has a master's program in nonprofit leadership, and I teach their law and ethics class. So I'm really looking forward to having a conversation with you today and talking about mergers and acquisitions and how they relate to nonprofits.
That's great. Thank you, Frannie. We're looking forward to that as well. And I also stopped counting at 20. Gary and I have both been serving nonprofits for over 20 years, right, Gary?
Exactly. Yes. More than 20 years. Yes.
Yes. Well, we get you to stop at 20. It works. All right. With that, we're going to move into our first polling question. And we need to know if you wish to receive CPE for attending today's webinar. So please take a moment to click on your yes or no there. I'll always try to give you a moment of silence for the CPE to get your attention, to make sure you have a chance to click that button. So probably just a few more seconds here. All right, some of you are, some of you aren't. So those of you that are here for the content and the legal updates, excellent. Those of you that want CPE, I hope you'll appreciate the content as well. So we are going to move forward, and Frannie, this is your slide.
Yep, thanks, Janice. So this is just a required disclosure I'm going to read just to make sure that that everybody's under the understanding that the material that's going to be, that has been prepared and is going to be presented today is for general information purposes only and does not constitute legal advice. Due to the evolving nature of the law, the information in this, in these slides and in this presentation may not reflect the most current legal developments. Anyone using this information should independently verify sources of authority to ensure accuracy and applicability to specific legal matters. The material is not a substitute for professional legal counsel, and its use does not create an attorney-client relationship between the user and McNees or any of its attorneys. Laws may vary by location, and the content is intended for informational purposes only. McNees, its authors, and reviewers disclaim all liability for any direct, indirect, or consequential damages arising from the use of this material. All right, now that we've got those disclaimers out of the way, we can get started.
That's great. Thanks, Frannie. As you start to take over a lot of this, I always wonder, you're going to talk about why some mergers and acquisitions work and others don't, which is a great way to start. But I also wonder, I think you'll be touching on today as well of why merge, like why do organizations do that? So maybe some of those success factors will help us do that as well. Hear from that as well.
Absolutely. Yeah, and thanks so much. I think it's really important to understand that nonprofits now more than ever are facing very challenging and difficult times. So I will tell you, just from my own personal experience, I have worked on more nonprofit mergers in the last 5 years than I did in the previous 16 combined. And I think a lot of that has to do with the pandemic. I think a lot of it also has to do with the changing rules and regulations that are required of nonprofits. And just, again, whether individuals are interested in raising their hand or interested in serving on boards, in order to make sure that a nonprofit actually works, you need to have board members, you need to have volunteers, you need to have donors. And so I think that looking at, first and foremost, when you're looking to see, should we consider a merger, should we consider an acquisition? And again, we're going to go into exactly what those terms mean along the presentation. But I think these are some of the things that I would love for you to be thinking about. So when we talk about success factors, we're talking about, again, mission alignment. So if you're looking to potentially merge or work with another nonprofit, one of the questions that should be first and foremost is, do our missions align? Do we both have similar philosophies? Are we both working towards the same, the same issues? I always look at, the American Heart Association and the American Lung Association, right? So is there mission alignment, and where is that alignment? So again, I think making sure, you don't want to confuse your donors, you don't want to go too far off mission. And so making sure that you are identifying when you're looking for these different types of mergers, again, is there first and foremost mission alignment, because you are a nonprofit and you are there and you have a mission and you have been granted this tax exempt status for that particular mission, with the understanding that the IRS thinks that you're serving, the public good. So making sure you have a good understanding of that mission alignment. Some other success factors and things to be thinking about when you're looking into this is a cost and resource sharing. So, now more than ever, there's competition for talent, which might mean that you're paying an increased expense for employees. So again, are you able to work with other nonprofits to share resources, to share employees? Same is true with board and staff capacity. I think, making sure, mergers and acquisitions are a lot of work on both boards. So, are both boards committed to making sure that this, merger and acquisition is a success? When we're looking at mergers, we're looking at streamlined programming. So, if there are tangential areas in which one nonprofit is providing services that overlap with another nonprofit, what I've seen in some of these mergers is both of these organizations agree that they can better serve the individuals that need the services by combining forces. And the other is really leveraging strengths, right? So, maybe you look at, and I always use, again, the Heart Association and the Lung Association, because some might say, is there mission alignment? And others might say, look, there are ways in which they can work together, and the power of them being able to combine makes them stronger organizations. What are some of the challenges that we face when we're looking at these mergers and acquisitions? Is really just, is there a lack of due diligence? Again, when I talk about board and staff capacity, I think that there has to be an understanding of, are we when we say due diligence, what does that mean? Are we looking at, the governance structures? Do they mesh? Are we looking at the employees? Do they mesh? Are we looking at the financials? The donor base, is the donor base the same? Is the donor base very different? Are we looking at what are the programs and services that are being offered by each organization? Again, that can also lead to mission misalignment and confusion, right? So if the idea is we're combining, the Heart Association and the Lung Association, and, is there any type of misalignment or confusion as far as, individuals who care about, your heart might not necessarily care about lung, research for lungs. And so, I think that that's where we really get into making sure that there is alignment with the mission. And then, loss of control is always a huge factor. So one organization typically is merging into another organization or being acquired by another organization. What happens to the board of the merging entity? Are there certain board members that want to join the new board? Does the new board want those board members? What happens to the employees of each of the organization if there's overlap? We also get into issues as far as name recognition, geographic concerns. So, if you've had a name that's over 100 years old, it might have had some significant name recognition maybe 40 or 50 years ago that just over the years is now no longer relevant. And so is there an interest in coming up with a new name? Is there an interest in keeping one name versus another? Will you be able to continue doing the programs and services that cover an entire geographic region? We see this a lot when chapters are looking to merge. Again, if there's 2 different counties, can the new organization cover both of those counties, for example? So those are some of the success factors and challenges that I want everyone thinking about as we move forward with the presentation.
It's great, Frannie. I think some of those success factors might help you answer the why. Like, why would you even start down that path? And some of that you need to consider before you even start going down the path. Like, why would we do this? Who's it going to help? How does it expand our mission? But I also see things, the loss of control. Who's going to lead the new organization or the merged organization? And I've seen things fall apart before they even really get started, because you're competing already in the C-suite in those leadership roles.
Yep.
Do you have any experiences with that?
Absolutely. And I think making sure, are you under non-disclosure, right? So do you have, legal documents in place as you start these conversations? Because what you don't want to have happen is start down the path of, hey, we need to start looking to potentially merge. We've lost some donors, we've had board members roll off. Maybe there's a lack of interest in some of the particular programming. Maybe the organization is really small. So I think that as we look at some of those factors, and we begin sharing that information where we get into that due diligence that was talked about previously, I think it really becomes important to make sure, do we have confidence that there will be a layer of confidentiality, and do we have the legal documents to back it up, to make sure that as we are talking through some of these mergers and acquisitions, there has to be disclosure as far as here's our strengths and here's our weaknesses, and how do we make sure that the other organization doesn't potentially exploit those strengths or those weaknesses as we start sharing that information during that due diligence process.
Great, Frannie, lots of things to think about. So now help us with maybe where do we begin, or different models? How would we start this? Or think
yeah, absolutely. And I mean, I wish I could say that there was a one size fits all for either a merger or an acquisition, but it's very fact specific. It really depends on what are the circumstances, why are these organizations getting merged, and, you know, or are they moving towards an acquisition model. So I'm going to go through just high level overviews of each of these different, and these are just the most common types of mergers and acquisitions. So the first would be a merger by law, and that would be filing a statement of merger. So what that means is there's a surviving organization and there's an organization that is getting merged into the surviving organization. And just the way it sounds, it's combining these two organizations into one. And so it's taking all the good, but also any of the bad. And so maybe we should call it strengths and weaknesses. But again, I think that you have to be very realistic with a merger and have a good understanding of, is there anything in this merger that could potentially be of concern in merging the entity into the surviving organization. So the surviving organization in general needs to be very mindful of, are there any liabilities? Are there any issues? Are there any pending lawsuits that could potentially harm the surviving organization if the merging organization, it has any of these particular types of issues. The other is an asset transfer followed by dissolution. And this is something that's commonly worked with in certain acquisition models. And what that means is, now again, there's different steps, and we're going to go into the specifics of those particular steps. But an asset transfer is, similar to a for-profit, but where there are two organizations. One organization, the board would approve to transfer any and all of the assets over to the organization that's going to be the surviving organization. And then the organization that transferred all of their assets is then going to dissolve. Now, sometimes, depending if there are liabilities out there, depending on how long the organization has been in place, depending on the type of mission an organization has had, while you're in the negotiation process, what we're going to be calling the exploratory phase a little bit later, what we're going to do is we're going to look and see, hey, as we're going through whether or not we should do a merger or an acquisition, we're going to look to see what are the concerns from the surviving organization. Are there any concerns as far as potential lawsuits where we would need to make sure that we don't transfer all of the assets? Maybe we have to reserve certain assets. And then again, make sure that we transfer all of the assets over to the surviving organization and then reserve enough assets in case there is some type of lawsuit. Again, sometimes it's just a matter of what the two different missions are of the organization, that an asset transfer would make more sense rather than a merger. So again, it's very fact specific, but during the exploratory phase where you do learn what are the financials, what are the risks, what is the risk tolerance of the new surviving organization, that we would figure out what this structure looks like. The third one is a conversion to an LLC subsidiary. So again, in that particular situation, what we would do is we would transition if there are two nonprofit organizations, we would convert, we would convert the assets. So if you have two various programs, you would want to set up what's called a single member LLC underneath the nonprofit umbrella. And then what you could do is transfer the assets into that LLC subsidiary. Now, the benefit of that model is that you have the parent organization that is a nonprofit, organization. So you still get the tax exempt status of it. You then have this LLC subsidiary that provides the limited liability protections to be able to limit what those protections are into that LLC. And then the last one that we're going to look at is just this conversion to a member nonprofit. And so what we would take is, again, 2 nonprofits. You would then, if you'll look in the bylaws, usually there's a provision in the bylaws that talks about whether or not it's a member or a non-member organization. What we would do is we would file to convert it to a member organization, and then the sole member of that organization would be the surviving nonprofit organization. And in those second 2 examples, the reason that you would want to make sure that you limit it to either an LLC or the subsidiary member nonprofit is just, again, to make sure that you limit what the liability is to that particular entity and you don't bring it to the surviving parent corporation. So I know that was a lot to cover. And again, the purpose of this, and maybe I should have started with it, the purpose is just to provide you with the understanding that there are various models. So there isn't just a one size fits all. There isn't just every single way to blend nonprofits together has to be through either a merger or an acquisition. It's really just to be able to provide background and the knowledge and the information that as you are considering how can we incorporate these 2 organizations, that there are different models, and the models that we select during the exploratory phase are really going to depend on what it is that the organizations themselves are looking to accomplish and the facts and circumstances surrounding those organizations. So I did see that we had an incoming question, which is great. The question is, do all mergers or acquisitions need Attorney General approval since they are public organizations? That's a great question. We're going to get into it a little bit later, but yes, you do want to make sure one of the biggest differences in for-profit versus nonprofit mergers and acquisitions in Pennsylvania is that there's additional level that the Attorney General that kind of sits as the parent to all nonprofit organizations. So the Attorney General needs to make sure that they approve what it is and what it is that whatever structure it is when you're potentially transferring assets of one nonprofit organization. So we're going to get into that a little bit later. But yes, there are definitely some additional steps that need to be taken in this.
Great, thanks for answering that, Frannie. And that's a good reminder for everyone. This is going to be much more interesting if it's interactive. We already have great content. Frannie's doing a great job. But if we have questions, that will, I think, make it much more valuable for all of us. So please don't hesitate to submit them and we'll make sure we get to them. So we will move on to the exploratory phase.
Yep, absolutely. Thanks. So again, looking at it from this exploratory phase, we're going to have 2 different phases. The first is going to be the exploratory. The second is going to be the implementation. So in the exploratory phase, that's really the due diligence. So we look to see, is this a good idea? Why should we be doing this? What are the risks associated with it? And then once you decide either yes, we should move forward, we move into the implementation stage, or at that point, you might get through the exploratory phase and say, oh, actually, this isn't a great idea. And it could be one board still wants to move forward and one board doesn't. There could be concerns from staff members, but again, it's really important to make sure that you look at this exploratory phase as, is this really something that's going to be successful in merging and or acquiring this other organization? So again, what we're talking about is looking for why would you do this, right? So is there timing? Is there finances? What are some of the issues that you would really be looking for? And again, I think that it could be, right, there could be, we've seen, certain issues as far as nonprofits who are saying, hey, we've lost certain funding that we previously had. We still want to be able to provide programs and services, or, we've lost big donors, we've lost significant board members. And so making sure that there's alignment as far as what that time horizon is. You could have organizations that are saying, hey, we need to make sure that we move through this exploratory phase very quickly. It's really important to make sure that the surviving organization, the one that is going to have the other organization either merged into it or taking the assets, still does a thorough job to make sure that, hey, is this something that works for us? So board members serve as the fiduciary to these nonprofit organizations. And so they have to be asking themselves, would entering into this merger or this acquisition be in the best interest of the organization? And if the answer is yes, once you get through this exploratory phase, then great, move forward towards the implementation. If the answer is no, or if the answer is we need additional information to make that decision, you should not be moving as board members. No one should be moving to that implementation phase until they feel comfortable that this is in the best interests of the organization. And again, you have to go on what information you're being provided, right? So, you have to have a good understanding. You could have board members who are saying, you know what, actually it would be so great to merge these two organizations together. There are board members who could come over, board members who might be able to help us. In reality, though, post the implementation, so once the two organizations have been either merged or the acquisition has taken place, there is always the chance, right, that certain board members roll off or retire or resign or move. And so, again, there has to be an understanding of, we are making this assumption as far as moving forward. We're making the decision to move forward based on certain assumptions. These are the assumptions that we have. Are they realistic assumptions? And again, assuming that we are ready to move forward, we are making the decision that this is in the best interests of the organization and making sure you document it in your board meeting, right? So we approve this, we believe that it's in the best interest of the organization, and now we're ready to move forward. So again, looking at what some of the successes and what some of the weaknesses are, again, we're going to talk about all of those during that exploratory phase. So, again, do you have your due diligence checklist? Do you have your financials? Where are you getting the financial information? Are you looking at the 990s? So again, what are the approvals that you need? How long do we anticipate this taking? Do we agree as far as going forward what the mission is? Are there any restricted funds that we need to consider? And are we able to fulfill the requirements of those particular restricted funds? So again, all of that takes place in this exploratory phase.
And you've said a lot of things there, Frannie, but it does kind of tie in a little bit to one of the questions that came in about useful checklists or tools for conducting financial due diligence. I mean, you mentioned 990s. Gary, that's a lot of your expertise, restrictions on net assets, things that are looked at in an audit. But anything you want to add to that, Gary? I think Gary will turn on his sound so we can hear him. I might have caught him off guard.
Sorry, I was listening to you ladies so intently here. So, but this is where you really bring your legal team and then your financial, your accountants together, because that due diligence checklist, et cetera, is going to be different from organization to organization. We have some templates that we certainly use, but we really modify it based on the situation. And as accountants, we work closely with the legal team as well, get the non-disclosure agreements in place to get things kind of moving, that type of thing. So it's just working with good advisors to get the process really going.
Yeah, Gary, and thanks for that, because it really does involve a strong team. So making sure, you do have your advisors and your financial advisors. You might have a strategic consultant who comes in to help, making sure you have your legal advisors in place. So it really does take a team in order to make sure that this is successful.
And I'm hearing it's not a one size fits all. I mean, there's some things you want all the legal documents, all the contracts, all of the 990s, the financial statements, whatever they are.
Right.
Exist. Probably some models, tons of things that happen in due diligence.
Right.
But a lot of those contracts and things, what are you going to be legally obligated for as a merged entity if you go forward with that route, or whatever the new entity or structure would look like? And sometimes those little details matter tremendously.
Absolutely. So, for as an example on your checklist, you might have, when colleges and universities are looking to merge, there's questions as far as, do you have any public debt out there? So are there bonds? Are there restrictions for the bonds? Is there an indenture that we need to look through? Are there any loans, any bank loans, any tax exempt financings? And so again, making sure that your checklist also fits what the organizations are and what they do, and making sure that you're asking those questions. Again, if your financial advisors are looking at the 990 and saying, hey, wait a second, you put on your 990 that you have $100 million of bonds outstanding and you mark that you don't have any public debt. Again, those are questions and red flags that should be brought to the attention of the board or the senior staff, whomever is, again, the liaison to work on this, and making sure that you talk through, hey, this is something that, we need to make sure we review. And again, making sure that you do a thorough job during the exploratory phase so that you're setting yourself up for when you make that go forward decision, that it's a successful implementation phase as well.
Thanks. We'll move on from exploratory to implementation.
Yeah, now we've gone through, we've identified what are the different models, what is the exploratory, what are our risks, what are the strengths, what are the weaknesses of each organization, and then we've determined, okay, this is the best model and the best path moving forward. Now we're ready to start what we're calling this implementation phase. And you can see there are lots of approvals on here. So the difference again between for-profit and nonprofit is that, and we're primarily talking here about public charities, so 501c3 organizations, they're public charities. And again, so there's no one individual that controls this money. It's considered a public charity, which is why there is so much governance and there is so much oversight, and why it does seem that we do need to have all of these approvals necessary to make sure that that we're taking care of these public funds that were given for specific purposes. So again, we're talking about obtaining internal approvals. So if there is, we talked before, there's some member organizations. So first, do we have is there a requirement that the members vote for it? Is there a requirement that the board votes for it? So you would look to your bylaws of the organization to be able to figure out what are those internal approvals that we need to do in order to move forward with the implementation. Then there's also the external approvals. So as we mentioned before, the Attorney General's office is going to want to issue what's called a no objection letter. And that just means that you provide information to the Attorney General's office, the background, the reasoning, the approval, the internal approvals, and then the Attorney General's office will look at it and either say, yes, we do not object to you moving forward with this, or yes, we have issues. Maybe there's geographic regions, maybe there's certain, the Attorney General's office might have issues with particular reasons why organizations shouldn't merge. Could be regulatory reasons, but again, that's why it's important to make sure that you go through that additional step to get Attorney General approval. And that's not just for transfer of all of the assets. If there is a transfer of, some of the charitable assets from one organization to another, it's important to make sure that you get that Attorney General approval. Now, depending if they're restricted assets, if there is a large geographic change, the Attorney General's office might say, look, we have no objection to this. However, we want you to file a petition in Orphans Court to also get Orphans Court approval. And so that could be another step that you have to take in order to make sure that you're able to transfer it and that the surviving the surviving nonprofit corporation doesn't have any lingering potential issues in not getting that additional step.
So, Frannie, for the orphans court approval, is it the Attorney General requiring that, or are there other reasons you would need orphans court approval? Like, do you just know going in you need it, or?
So again, depending on if you have, if there's geographic changes, if there's restricted assets, even if the, and again, this is where you work closely with the Attorney General's office. Even if the Attorney General's office says, we don't think that you would need orphans court approval, there might still be other reasons outside of just getting Attorney General approval to get that orphans court petition in there as well. And again, some of it's risk tolerance and some of it is, you have to make sure that, you're potentially moving charitable funds from one geographic area to another. And so again, we might need to bring in the orphans court to make sure that that transfer is acceptable.
So I wouldn't say always or never, but definitely something you should think about and be building into a timeline. But
exactly. Yeah, I think that, that's exactly it. I think making sure that you build in your timeline, right? Because, if you say we want to make sure that, so, a lot of organizations have a June 30 fiscal year end. So they'll say, hey, we want to make sure that this is done by June 30. And then when we're putting that timeline together for implementation, we're always building in time for Attorney General approval, always build in time for that orphans court, even if you don't think that you're going to need it, because you just, again, if it's something where the Attorney General's office says, look, we don't feel comfortable with moving forward unless you get that orphans court approval, you might need to actually build that in just in case. And then depending on whether you're doing a merger or if you're doing a dissolution as part of an acquisition, you would need to get your tax clearance certificate. So again, this is relevant in Pennsylvania. So you need to file, and you might be saying, wait a second, why do I need tax clearance certificates? I'm a tax exempt organization. There's some exceptions to it. And so you'll need to make sure that your employment taxes have all been paid. And so that would be getting approval through the Department of Labor and Industry, and then also the Department of Revenue. So making sure, did you pay all your sales tax? Are there any other taxes? Once you get those two tax clearance certificates, you can use them to file with the Pennsylvania Department of State in order to dissolve an entity if you're going through with an acquisition, or again, if you're going through with a merger, then you don't have to get those tax clearance certificates.
So you think about a timeline. I know nothing is typical, but on average, how many weeks, months would you want to leave for all these external approvals?
Yeah, absolutely. I think, at least as we're talking about the implementation stage, I definitely recommend at least 3 to 4 months just to, and some people are like, that sounds like so much time. However, making sure, depending on the size of the board, if it's a really large board and there's quorum required and, there could be additional levels to make sure that there's approval as far as the dissolution goes. And so if you need 2/3 majority, if you need 3/4 majority, again, making sure that you build in time to be able to obtain each of these approvals. So what you don't want to do is to shortchange yourself and say, it's not going to take that long, and then be scrambling last minute and then miss your deadlines.
And when while this due diligence is going on, et cetera, you got to keep in mind as time goes on, you got to still file your 990. You still got to do audits if applicable. They might be for short period returns, but the effective date of a merger, for example, can be really critical. If both organizations are on the same fiscal year, then you do it at the end of a fiscal year, et cetera. It's pretty easy, pretty seamless when it comes to filings, but often you'll have different fiscal years for the entities, and then you pick a date kind of in between, and you've got to reflect that if you're the entity that's getting merged into another entity, you're gonna have to reflect in your 990 that merger transaction. Essentially, you're distributing your net assets out to the new entity, And so you got to reflect that in your 990. And ultimately, after you distribute and transfer your assets, you also will end up having to do a final 990 as well. So you've got to take care of those things as if you are in a dissolution situation.
Yeah, Gary, that's a great point too, as far as additional filings that are needed. So it's not just filing, you know, an articles of dissolution with the Department of State and saying, all right, that's it, we're done. They call it winding down for a reason. So making sure, are all the bills paid? Are there any outstanding liabilities? Do you have the funds? You know, making sure that if you have $100,000 left in your account at the end of the day, that that's not someone's, you know, to go home with. That has to also get transferred over. So making sure that, you know, again, there's an understanding of, especially when we're talking about some of these operational considerations, you know, it could just be, okay, we're looking to see, like, are there any redundancies, right? Do we have 2 CEOs? Do we have 2 CFOs? Do we have 2 chief marketing officers? Do we have, you know, so making sure that there's an understanding of, you know, are there employees that we're keeping, and are there employees that won't be there post-merger? And so that also could take some significant time to figure out what are those, you know, different operations. Is one using QuickBooks and one's using, you know, some other software version? How do we make sure that all of the books and records are properly transitioned over? You know, how about the donor database? So again, it's really making sure that, you know, and we do have checklists on this, but making sure that there's a step-by-step process of how to make sure that you have all of the information that you need to be able to continue on with programs and services from that, either that organization that's getting merged in or the organization that's getting dissolved.
A lot to think about for sure. Let's go to the second polling question. So has your organization been part of a merger or acquisition in its history? Yes or no? A little more time here. Get your answers in.
Okay, keep in mind, you have to answer the CPE questions to get your CPE certificate for the 75% of you that want that. So make sure you're answering them. This is number 2 of 4. So.
All right, 47% yes, 53, a close call here in terms of merger activity or acquisition activity. Excellent.
Yeah, absolutely. It'd be interesting to see, again, if you know, for those who have gone through mergers, if you've seen any types of, yep, actually we did have mission alignment and it was successful, versus, oh, we didn't, you know, we didn't think about that, and we've had some struggles along the way. So again, whenever you're looking to combine 2 different organizations, it's different cultures, different people, potentially, you know, missions that might be similar but not exactly the same. And so, you know, really making sure, how are we setting ourselves up for success? I know we had talked about some of this beforehand, but again, these are just what we see as far as common challenges and just areas in which to think about. You know, is there any type of mission confusion, right? So do you have a branding company that's going to come in and work with you? What are your communications moving forward? Would there be any type of donor confusion? So that's something that the IRS really looks at. Again, what we had talked about before, just to try to keep it simple, is if you're merging the Heart Association with the Lung Association, do donors know what it is that they're you know, what they're donating to, right? Are they, if they feel strongly for heart, do they have that option, right? Is there a restricted fund? And let's say, for example, if the Lung Association merged into the Heart Association, if there are restricted gifts, right? So someone might have made a donation and said, this can only be used, I'm giving this money to the Lung Association. It can only be used for asthma-related treatments, right? So when these two organizations merge, right, is there a question of what happens to those restricted funds? Is the Heart Association, if the Heart Association is the surviving organization, are they able to guarantee that those restricted funds are going to be used for the particular purpose in which the donor provided those funds? And so it's really important to make sure that you have a good understanding of what are those restrictions associated with some of the funds, right? So, and again, I'm picking on the Heart Association and the Lung Association are made up nonprofits, but I think just, again, if you're looking at the Lung Association and you're saying, hey, it's got a fund balance of, $2 million, once you get into your due diligence, you might have a better understanding of, it might have this balance of $2 million, but it's restricted, let's say 1.5 million of it is restricted for this asthma research. So as the Heart Association, if you're saying we're going to merge this entity into ours, do you have programs and services that you can use to spend down those restricted funds? Do you have a program that could focus on the asthma research that's needed in order to make sure that you're complying with what some of those restricted documents are looking like? Some of the other, again, founder syndrome, leadership ego, it's really a matter of how are you merging these two cultures together, right? So financially, it might make sense. Legally, it might make sense. So on paper, you could be like, this is the most amazing idea ever to merge these two organizations. But you have to look behind the paper and say, hey, wait a second, culturally, will these organizations be able to work together? So you might have a founder of one organization who has run it for 50 years. And then you're saying, wait a second, in merging these organizations, maybe there might not be a place for the founder, right? And so what happens at that point? Does the founder then say, again, you're doing everything wrong, none of this is going to work? Or is the founder saying, hey, I recognize that if we don't merge these organizations, that my organization will no longer be here and be able to provide the programs and services that individuals need. So I think that it's really, also as part of this due diligence is making sure that this is going to be a good culture fit. Same with geographic or brand conflicts, right? So, if you're used to serving Pittsburgh and Philadelphia, and you're blending these two different organizations together, how do you make sure that you're able to serve both the Pittsburgh and the Philadelphia communities and do a good job in serving both of them? So do you have that geographic capability to merge these organizations and then also continue to serve the individuals, again, that need to be served?
Great. Thanks, Frannie. We'll move on to polling question number 3. Do you believe a merger or acquisition is a real possibility for your organization in the next 3 to 5 years? So we know that almost half of you have said, yes, you've been part of a merger or acquisition, and now we're going to look forward a little bit. Frannie, you touched base a little bit on culture. And I've seen mergers go really well and mergers go not so well based upon culture. And I certainly think we talk a lot about mission and mission alignment, and that's absolutely critical, but the cultures can certainly make a big difference. So there we go. It looks like almost half of you are going to be focused on a merger or acquisition in the next few years. At least that's what you're anticipating. So that may be why a lot of you are interested in this topic today. So great to know. Thank you.
Yeah, absolutely. And I think, if you're either thinking about it or even if you're not thinking about it right now, I think there always has to be a question of whether you should be thinking about it as, you know, as fiduciaries, as board members, as advisors to nonprofits, because if you do see a nonprofit struggling, there has to be the questions as far as, should we enter into resource sharing? Should we enter into a shared services agreement? Should we consider a merger? Should we consider being acquired? Or, you know, again, if you're a really strong organization, one of the questions you could be asking is, should we be acquiring others to make sure that we're able to serve additional individuals? Or are we able to layer in, are both organizations serving the same individuals, and in combining, are we able to provide better and more consistent services to those individuals in need? So a question always comes up, how do you fund for this, right? So how do you pay your team? How do you pay your lawyers? How do you pay your accountants? How do you pay your auditors? How do you pay your financial team? So again, it's something where the board has to look to see, are we able to afford this? And there are some other external funding sources. And so again, the Nonprofit Repositioning Fund, the Forbes Fund, Sea Change, all of those are really fantastic organizations. And you can get grants to be able to do grants for exploratory phase, grants for the implementation phase. And it's so important to understand, you know, these organizations, these external funding partners are out there because they believe in the mission of nonprofits, and they want to make sure that any transition for nonprofits is something that's going to be successful. So again, as you're looking to figure out how can we pay for this, there are funding sources out there to be able to help with some of these fees and costs associated with it. And make sure that you budget, right? So as you're putting your budget together, budget for an exploratory phase, budget for the implementation phase, and don't wait until the last minute. If you're thinking, hey, we're looking at our financials and we understand that in, you know, the next year or two, we're going to be running in the red, it's time to start thinking about either we need to make some changes within our organization, or we do need to consider whether or not we need to merge or be acquired, or should we be acquiring other organizations?
Great.
Let me as we're going to quickly wrap up here, we only got 8 minutes left. Let me talk about some key takeaways from our session here today. Certainly, you know, just keep the end in mind is really kind of the, you know, what are you trying to accomplish? You know, select the merger acquisition model that fits mission and goals. One thing that came to mind is that sometimes, you know, it'll be a two-step process. You can become a member nonprofit organization where you keep your board intact, and then you start working together as two organizations. The member is the other organization that you're working with, and you can start sharing management. You can start sharing staff. You can do a lot of things, and then if it works out really, really well, then ultimately become one and merge the two together. So, you know, there's ways to do this pretty creatively. So keep that in mind. Keep the engage, again, accountants, auditors, financial advisors, and definitely have the board involved, because they may have to make some really, really difficult, challenging decisions, especially on staff. And as passionate as leaders are of nonprofit organizations, somebody may have to step aside, take a different role, et cetera, and the board ultimately has those kinds of decisions. So keep those things in mind. Last polling question. So here's one, you know, that Frannie likes out there in the Philadelphia area, being an Eagles and a fan, as well as Phillies. Can the Philadelphia Eagles win back-to-back Super Bowls? Yes, no, or can they win and also the Phillies win the World Series as well? And if that happened, I don't know what would happen in Philadelphia. It would be chaos.
Gary, I know what my answer is to this polling question,
Yes, we know.
even though I can't vote on it. There we go. All right. Oh, wait, no, what?
Yeah, well, at least 57% said yes.
Right.
Yes.
Okay.
And. So that's pretty good, but you do see some of the split there. So we have finished our polling questions. And Frannie, do you have any final comments? We've certainly enjoyed presenting with you today, or any of those takeaways you want to emphasize here.
Yeah, absolutely. It's been such a pleasure working both with you, Janice, and with you, Gary. I appreciate the opportunity. I appreciate everyone for listening in. And again, I think just make sure you reach out just in the very beginning stages. I think getting your team involved in the beginning stages is so helpful to also make sure that this is a successful transition. It's a big deal. It's, you know, a big transition, and having the right people in place to be able to help provide guidance and lead you through it is crucial.
That's great. Thanks, Frannie. We appreciate those of you that submitted questions. I think we did answer the questions that we received throughout the webinar. There's a quick slide with our contact information. I know you will also be able to download the slides. And a recording of today's presentation will be posted on our website and social media sites within a few days. So if you didn't get to capture it here, you could always go back and listen to some of the key points there. For those of you that requested CPE and answered the polling questions, we'll make sure that you get your certificates within the next month. So thank you for joining us today. We certainly appreciate all of your time. We hope you found this helpful. With half of you almost have been through this, and half of you looking ahead, thinking there might be a merger acquisition on the horizon. We certainly appreciate Frannie's time today, bringing all this great legal perspectives. Gary provided a lot of good accounting perspectives, 990s, things to think about. So we hope that's useful for you going forward. Really quickly, as we ended here, we have 2 webinars coming up in the short term. September 25th, High Trust Assessment Preparation, Preparing for Success Now. So discuss best practices in preparing for and successfully completing a high trust assessment, if you need that level of assurance over some of your controls. And the second one, a shameless plug here, I do an ethics webinar with Mike Hoffner annually. So this year we're going to focus on professional ethics and the implications of technology. So we hope you can join us for that. Many of you need your ethics CPE this year, we know it. So we certainly hope you can join us. So any last minute words? We each have about 30 seconds, Gary or Frannie.
No, it was a lot of fun to work with you ladies on this webinar. So all good stuff.
Yeah, absolutely. Thanks to both of you, and thanks for your time.
All right, great. Thanks so much again, Frannie, for joining us. And thanks to all of you in our audience. We hope you found it useful, and enjoy the rest of your day.